I do want to let everybody know that that with trading, there is no such thing as an undefeated season. When you are trading, you shouldn't invest money that you can't afford to lose. You should always trade with proper equity management in mind. Now, it is also highly recommended that you go through our entire education. You learn this trading strategy in its entirety before you actually place trades. And before you place any trades, we will be going to live market. I will be showing you this trading strategy and some of the actual recent trades from this morning using it. But when you do actually go to place a trade, that decision to make a specific trade is yours and yours alone. So just like Renee had mentioned a little bit about me, I am William Gallagher. I'm one of the senior market analysts here at Market Traders Institute. I have been trading in these markets since about 1998. I've also worked for several different financial companies, also helped start, launch, and build an entirely new financial services company from the ground floor up. More importantly, though, I'm also a student of Market Traders Institute, so everything I'll be showing you here today, especially this trading strategy, I actually have learned through Market Traders Institute. Now, some of you may have seen my colleague earlier here. You may already know who Market Traders Institute is, but for those of you that don't, let me just give you a quick update as to who Market Traders Institute is. We've actually been training new people on how to trade since 1994. So we've actually been around this business, training new people on how to trade for about 22 years. Last 22 years, we've actually trained over 30,000 students on how to trade. The building you see on your screen right here, this is actually our building. I'm actually broadcasting out of that building here today. We're located just a little bit south of Orlando, Florida, just to give you guys an idea where we're located. Also, we are getting some press here. You can see here Inc. Magazine. Inc. Magazine, they actually ranked us on their Inc. Magazine's top 5,000 fastest growing companies last year. Were mentioned in the same breath as Under Armour, Microsoft, GoPro, just to name a few of the companies that are on this here. So we are getting a little bit of press here with that. But not only does Market Traders Institute have some of the best education, we have some of the best technology, which I'm about to show you here today. We also do have some of the best Forex traders in the business here. One of them, his name is Joshua Martinez. Some of you may have heard of him before. He is the creator of this program I'll be sharing with you here today. This the London Breakout strategy I'll be sharing with you here today. He's the one that taught me how to do this as well. Now, a little bit about Josh. Josh has been trading for several years. He's one of our product experts here. He's trained thousands of Forex investors here, made thousands of investments. So you may have heard him speak before. He's been part of the Money Show. He's been in Vegas. He's done a lot of speaking here. But he is a full-time trader and, like I said, the creator of the program I'll be sharing with you here today. Now, just to kind of give you an idea of the type of results that Josh is getting in this market. This is his trading account just from this year here. You can see here he's up about 17,000 pips so far, about 73% winning percentage in his trading here. So I'm going to show you one of the trading strategies here that he utilizes to get these type of results here. Now, what I'm going to do is before we jump into this here, I know a lot of you are probably stock traders, probably options traders, but let me get an idea of what your trading experience as far as the Forex market. So everybody can just quickly look at the screen here. If you are brand new to the Forex market, go ahead, type in number 1 in this and let me know you have no experience whatsoever. If you do have a little bit of experience as far as trading the Forex market, type in the number 2. If you do have a little bit of experience as far as trading, an experienced trader, type in number 3. That's going to help me tailor this presentation because if a lot of you already know what the Forex market is, I'm not going to go into a lot of detail explaining exactly how it works here. So I'm getting a lot of number 1s here, a couple 2s. I'm getting a couple of number 3s here. So what I'll do is I'll go ahead, let's go in right now. Let me just go ahead and give you a quick overview of what the Forex market is, why you should be trading it. First of all, number 1, the Forex market, it is the largest financial market with almost limitless amounts of liquidity. In fact, there's over $5 trillion that's daily traded in this market. It's also a very flexible market. I'm going to get on and touch on that here with this trading strategy here in just a second. But there are 3 trading strategies that go on daily in this market. You have the Asian session, the European session, and you have the United States session, the New York session here. These sessions, they overlap. This is going to be a key in explaining to you this trading strategy I'll be showing you here today. But the main point you need to take away is that this market can actually be traded 24 hours a day, 5.5 days, 24 hours a day. Now, to give you an idea of what we do in this market, essentially what we're doing is we're trading one country's currency against another. So if you look on this chart right here, upper left-hand corner, we are on this chart, we're trading the Great British Pound versus the US dollar in an attempt to figure out which one's going to gain in value against the other. Now this chart you're looking at here, this is what's called a candlestick chart. In fact, these candlesticks, they turn into what you need to know about this in this presentation is the white ones mean the market's going up, The dark blue ones mean that the market's going down. I'm going to pull my charts here in just a second, show you how I can customize this for those of you that might like different color combinations. I just want to show you here that today the white ones mean the market's going up, the dark blue ones mean that the market's going down. The other thing about these things is that these Japanese candlesticks, they represent your time frame on the chart. In fact, on this one right here, this is a 240-minute time frame. So what this means is that each candlestick represents what the market has done during that 240 minutes. Now, another thing we teach our students here, I'm not going to go into a lot about that here today, is these candlesticks will form what are called candlestick formations. These candlestick formations, they're kind of like the sign language of the market, and we're going to use them to help us predict where the market's going. So you have this candlestick here, it's called Morningstar candlestick formation, kind of giving the trader here a little bit of a hint saying, hey, look for this market to U-turn and go up in a bullish movement. You have this evening star candlestick formation saying, hey, trader, look for this market to U-turn and go downward in a bearish movement here. And we do teach this in much greater detail in our education here. Now, the thing about this is that we're trading currencies. They're called currency pairs. In that case there, it was the pound versus the US dollar. There's about 60 different currency pairs you can trade in this market. Market traders, this is because we have about 22 years of experience in trading in this market. We'll narrow it down a little bit more and show you which ones to pay attention to. In fact, today I'm going to show you 6 different currency pairs to focus on with this trading strategy here. Now, in the Forex market, what we're trying to do is capture what are called pips. PIP is an acronym. It stands for price interest point. So if we were looking for a unit of measure, if we're looking for a unit of measure that's smaller than a penny, it would be the equivalent to a pip. So let me just kind of give you an idea of how this works here. Just as there are 100 pennies in a US dollar, a penny, it represents 1/100th of a US dollar. A pip, it represents 1/100th of a penny. So just as there are 100 pennies in a US dollar, there are 100 pips in a penny. The pips are represented by these last 2 digits right here after the pennies right here. So that's what a pip is. It represents 1/100th of a penny here. So let me kind of give you a very basic idea kind of how this market works. A lot of you are probably familiar with how a currency exchange. You basically, if you were going to be going to a different country, you want to exchange your currency, you go to one of these kiosks here and you exchange, for instance here in the United States, we would exchange our dollars for whatever currency we're looking to go to here. So let's just say that here maybe we're going to be taking a trip to Canada. We're going to be leaving the United States, we're going to Canada. We would want to exchange our US dollars for Canadian dollars. So at this point here, let's say that the exchange rate for the US dollar and the Canadian dollar is 1.32. So what that means is that 1 US dollar is going to equal $1.32 of Canadian dollars here. So if we were to exchange 1,000 US dollars, we would get back 1,320 Canadian dollars. Now let's just say here we did this in the morning. Let's say in the morning, we left the United States, we go to Canada, the exchange rate was 1.32. Let's say that in the evening, we come back to the United States, let's say we didn't spend any of our money here, any of our Canadian dollars, and we want to exchange those Canadian dollars back for US dollars. Let's just say that went up by 1 penny. Let's say the US dollar Canadian dollar exchange rate now is 1.33. So our 1,000 US dollars are now worth $1,330. So we essentially made about $10 on that transaction. We basically get back $1,010 on that here. Now, in the Forex market, like I just explained here, each penny of movement, it equals 100 pips. So if we were to kind of take that and use that here in the Forex market, on that basic exchange right here, we would have captured 100 pips on that exchange right there. But let me kind of give you an idea of what those pips are worth. And in the Forex market here, we utilize leverage. So here this leverage is provided by your broker. It's going to allow you to place the trade and to generate the pips on those trades here. So we have 3 basic lot sizes here. You have a micro lot. It's about a $20 investment from your trading account. Each pip would be worth 10 cents. So on that exchange right there, if we were to capture that in the Forex market, those 100 pips with a micro lot, it would be worth $10. We have a mini lot. A mini lot's about a $200 investment from your trading account. Each pip is worth $1. So on that exchange right there, those 100 pips, they would be worth $100, that $1 per pip. Now, a standard lot is the standard by which most traders strive to achieve in this market. A standard lot, an investment of $2,000 from your trading account, each pip is then worth $10 here. So in this case right here, those same 100 pips you just captured, they would be worth $1,000 here. So if everybody just wants to have an idea of what we go into the live market here, if you're a micro lot trader, each pip is going to be worth about 10 cents. A mini lot trader, each pip is going to be worth about $1, and a standard lot, each pip is going to be worth about $10 here. So let's go ahead. Now you have a basic idea. And once again, there's a little bit more to this. I'm kind of giving you a Cliff Notes version, kind of how this market works, because we're about to go now into the live market. I'm going to teach you this London breakout trading strategy, kind of show you some of the bells and whistles on our trading platform here. I'm actually going to show you here how you can actually take this trading platform for a test drive here today, risk-free, at no cost to you for 14 days. Let's go ahead. Let's jump in right now. You might want to write these down. These are the 6 currency pairs we are going to be focusing on for the London breakout strategy. They are the Great British Pound, GBP, Canadian Dollar, CAD, Great British Pound, US Dollar, Great British Pound, Japanese Yen, Great British Pound, Swiss Franc, Great British Pound, New Zealand Dollar, and the Great British Pound, Australian Dollar. So most of you can probably already tell that these are all British Pound based pairs. So one of the reasons for this is because we're going to be utilizing these pairs during the London trading session here. So let's go ahead and here, let me quickly explain to you what we're going to do with this trading strategy. Our goal is simply to capture 50 pips per day per currency pair. Now, you're not going to be trading each currency pair each day, but we're looking at basically what's called first base. Our goal is to capture 50 pips per currency pair per day here. Now, to kind of give you an idea, I'm actually going to show you here over the last 2 weeks what these currency pairs have done. In fact, we've actually have captured, if you were to use this simple trading strategy I'm showing you here today, you would have captured about 1,600 pips just going on first base. Now, obviously, there'll be a lot more opportunity to capture more. I'm just simply going to show you the simple trading strategy of how to capture 50 per day. Basically, that's an average of about 177 per day, utilizing the same trading strategy I'm about to show you right now. So let's go ahead in right now and let's pull up our charts. I'm actually going to demonstrate this for you and show you how this actually works here. But before we do, like I said, we're going to be using these 6 Great British Pound currency pairs. What I'm going to do is I'm going to kind of give you show you some of the bells and whistles right now with this charting platform. That those of you that choose to take advantage of it, what you're going to be able to utilize with this here. So let me quickly show you here how we can actually, how easy it is to use this charting platform. In fact, this charting platform I'm showing you right here, this is called our ultimate charting platform here. Our ultimate charting software. Out of the box, it's very user-friendly here. Like I said, normally you would have to be a student of Market Traders Institute to get access to this. I'm going to show you here today as part of Investor Inspiration. You can actually get this in your hands here today. Take it for a 2-week test drive at no cost to you here today. So stick with me. Now let me kind of demonstrate some of the actual things you can do with this here. Now, a lot of you might notice here, you might wonder why all these rectangles are up here. These are what we call workspaces. The neat thing about our charting platform is that if there are certain different pairs or different types of currency pairs that you like to kind of group together. For instance, here I have a lot of them grouped basically by their currency pair in different time frames. You can create what's called a workspace. Let me quickly show you how this works here. You can come up here, click on Workspace, add a new one, and let's just call this one, let's call this 30 to 50 pips. Just for simplicity's sake for this here, and then bam, it's going to open up a new workspace. Now what we're going to do within this workspace is we're going to open up charting within here. So what I'm going to do is I'm going to go ahead and just pull up a quick chart here, and let me show you how actually this works here. I'm going to pull up what is the US dollar, Canadian dollar, and I'm going to show you this on a daily time frame. I'm just going to pull this up here, kind of give you an overview of some basic trading strategies here within the Forex market. And very simply here, the chart pulls up, and here is the US dollar, Canadian dollar on a daily time frame. Now, a couple of things you're going to need to know about the Forex market. Some of the tools that we use in this market here. One of those tools is called a Fibonacci tool. It's called a Fibonacci tool. Now, we also use a trend line tool, and we also use what are called, we have a crown tool, King's Crown tool, and there also are what are called head and shoulders tools. Now, obviously, some of you here in the room, you probably already know how to draw these manually. I'm actually going to demonstrate these for you and show you how we have tools that do all this automatically for you here. So let's go ahead. Let me see where we are here. Let's go ahead. We'll start off right here. We'll just go back right here on the US dollar, Canadian dollar, and let me quickly demonstrate to you how the Fibonacci tool works. One of the things you might notice in this market, I'm going to allude to this here in just a little while, is what's going to happen in this market is that what we're looking for, when the market's going up, we're going to be looking for it to make higher highs and higher lows. And then when it's going down, we're going to be looking for it to make lower lows and lower highs, just like that here. So it's going to help us to determine trend direction in this market, just like that here. Now, when the market's going up like this, we can use our Fibonacci tool to take advantage of these wave moves. So I'm going to go ahead and demonstrate our Fibonacci tool just like this. When we determine what's called an A to B boundary, we can come in here and spread our Fibonacci tool just like that here. Now, some of you have used Fibonacci's before. You might be wondering, well, why are these different colors? We color coordinate our Fibonacci's to make it very easy to understand. So for those of you that have never used Fibonacci's before, what we're going to be looking for here is we'll be looking based on where the market pulls back, where it retraces, where it's been, it's going to help us predict where it's going. So in this case right here, the market pulls back to one of these red retracement lines. So this is going to help us determine and to be looking for the market to come up here to our red extension, just like that. So like a buddy system, what we've done is we've color coordinated our Fibonacci's red to red, blue to blue, and green to green. Now there's a lot more to this here. I'm kind of just giving you an overview of how this works here. So what you can see here is that the market pulled back to our red retracement level, comes up here, hits our red extension, and we've finished what's called an A, B, C, D swing. Now when that's done, we can come in here, we delete these Fibonacci's, and as long as the market is going in an upward motion like this, upward movement, we can continue to come in here and spread our Fibonacci's just like that. And can we continue with these A, B, C, D swings here. Now we also have a tool here. In fact, I'm going to delete all this here. Now we have a tool that's going to make it very easy for everybody. It's called our Auto Fibonacci tool. It's built right in here. It's called our Smart Fibonacci tool. So to find direction in this market, in fact, what I want to do before we get an idea here, for those of you who wonder, well, how can we determine when the market's going up or going down? Well, we have what's called a trend line. We can draw a trend line just like this. And for instance, here on the US dollar, Canadian dollar, as we are above this trend line, we're in the buy zone. When the market breaks below this trend line, we're in the sell zone. So what we would do then is we come in here, we can draw our trend line just like this. And as long as we are below this trend line, we're in the sell zone. Now what happens right here is that the market then rallies up, breaks above this trend line, so we're back in the buy zone. Now, as I explained to you before, we can teach you and show you how to draw these trend lines. Very easy to use this charting platform, but built into our charting platform, we also have a smart trend line tool. So all we would have to do is simply come up here to the beginning of the new trend, and we can draw it just like that. And just like we were down here, oops, we can draw it just like that. And these are built right into the charting platform as well. Like I said, the chart form, very out of the box, very user-friendly on how to use it here. So we've just determined here that we are now in that new upward movement here. All we would have to do for our Fibonacci's, we come in here with our Smart Fibonacci tool, we come down here at the beginning of that new trend, and we simply just draw it just like that. And it automatically draws our Fibonacci tool just for us, just like that here. So I'm not going to come in here, kind of give you a whole dissertation on how Fibonacci's work, that sort of thing. Just want for those of you my more veteran traders here, or for some of my brand new people, we can teach you and show you how to do this as well here. Now, as I mentioned before, we also have other tools that are built in here. We have an Auto King's Crown tool, and we also have a Auto Head and Shoulders tool. So let me back this up here. Let me kind of show you here how the Auto Head and Shoulders tool works. Let's see, we can probably go right. Let's see if it'll work. So I'm going to find a good place to show the Auto Head and Shoulders tool. Let's see here. Maybe right here. Let's see if this works right here. So we can come up here just like this. There we go. And this will help to determine if you're correct in your analysis just like that. See how it lines up? Lights up green just like that, so you know you're doing it right as you're doing it here. So I just want to explain to you some of the neat features that are built in here. The other couple things, I'll kind of see if I can demonstrate this as well. To be able to trade in this market here. Let's go back here to the beginning of that market. We also have the ability to do trading directly from your charts here. So let me go ahead and show you how that works here. If we come in here to trading, you can come in here, and if you already have an account set up, a trading account set up, you can add it to your charts, or the other neat thing about this is that you have the ability to do demo trading right from our account here. So I'll just go ahead here, let's type this, make this investor inspiration. Inspiration demo. And yeah, you can come in here and you can actually do demo trading right from our charts. And you can come in here and determine what you want to put in as your initial balance here. Let's say that maybe you'll start off trading $2,000 in your trading account. And then bam, so now we have a demo account set up. Let's go ahead, let's connect that account. And you can actually do demo trading right from your charts here. So let's just say that we want to come in here and let's just say that right here on the US dollar, Canadian dollar, let's say that we want to place a trade right now. So we would simply come in here. If we want to buy the market, we come in here, set this for US dollar, Canadian dollar, and we'll set that to our Investor Inspiration trading account. And if we want to come in here and set our stop and limits, we can go ahead and do that as well. But if we simply just want to come in here and place our trade, bam. There we go. Now we're in this market. We're buying into the market, so you can actually trade right from the charts. And we also have another neat feature, which I'm not really going to go into here. We also have auto trading systems as well. In fact, speaking of systems, we do have custom indicators you can create. We also have a lot of built-in indicators as well that are built into our charting platform, just like that here. Stochastics, all kinds of Bollinger Bands, everything you want is built right into the charting platform as well. So just want to kind of give you an idea of some of the bells and whistles that are built into this here, how the charting platform works. So for those of you that want to take this for a test drive here today, we'll also show you here how we can teach and show you how to use a lot of these as well. But let's go back in here. Let's get back into that London breakout trading strategy here. Let me kind of show you how this works here. So all I'm going to do is I'm going to go ahead. As I said, these are the 6 different currency pairs that you can utilize this on. The pound US dollar, the pound Canadian dollar, the pound New Zealand dollar, the pound Japanese yen, pound Swiss franc, and the pound Australian dollar. So let's go ahead and here I'm going to pull up the Great British Pound New Zealand dollar. Before I do this, though, maybe you might already notice that each one of these is set on a 1-hour time frame. Just kind of give you an idea. They're all on a 1-hour time frame. So let's go ahead, let's pull this up. And let's come in here, and let me quickly explain to you here what we're looking to do as far as trading this here now. So let's go ahead. I'm going to give you an idea of how this works. There we go. So what we're looking for, draw this out here. What we're looking for is we'll be looking to trade this initially beginning during the London trading session here. So here's what we're going to be looking for. We're going to be looking for between 2 o'clock a.m. Eastern Time and 5 o'clock p.m. Eastern Time. What we're looking for is either the initial high or low for the morning. Now the reason for this, as I mentioned before, you have 3 different trading sessions going on. You have the Asian trading session, the London session, and the New York session. What you have going on right here is the close of the Asian trading session and the launch of the London session here. So what we'll be looking for is directional movement coming off of this between 2 a.m. and 5 a.m. So either we're going to hit our low point for the day and we're going to rally up, or we're going to hit that high point and we're looking for that bearish movement coming down here. Now, on the opposite side of this, we're also going to be looking for between 8 o'clock a.m. Eastern Time and 2 o'clock p.m. Eastern Time. We're going to be looking for the opposite high or low for the day. Now the reason for this is you have the close of the London trading session and then you have the beginning of the US, the New York trading session, in between these 2 time periods here. So what we're looking for is this directional movement in between this time period, beginning in the London session here. Now what we're looking for is in this directional movement, we're going to be looking for a minimum. What's called the average daily trading range is anywhere from 50 pips to over 200 pips during this time. So what we're looking for when we establish that high or low, we're looking for directional movement of a minimum. Like I said, we're going to be going after during this trading session here, this strategy here, we're going after that minimum of 50 pips. We call this first base here. So I'm going to show you a trading strategy. I can go after 50. If you go through some of our more advanced trading strategies, our live market Forex sessions that we have as part of our education here, we'll teach you and show you how to go after actually more than that here. But I'm going to show you how to go after 50 here. Now, once again, 50 pips per day per currency pair. What we're looking for on a mini lot account, if you were trading a mini lot account, that would be about $5 per currency pair per day. Not all the money in the world, but that's $5 if you're trading a mini lot account. If you build that up, maybe build it up to that's a micro lot account. If you're trading with a mini lot account, at $1 per pip, that would be about $50 per currency pair per day. And then when you get up to the point where you're trading a standard lot account at $10 per pip, that would be $500 per currency pair per day. So let me go ahead in here now. Let's go ahead. Let's start showing you how this actually works. Now, what I'm going to do is I'm going to come in here and show you this directional movement here. In fact, let me delete some of this here because I'm going to need to. Oops. There we go. That's another neat thing about our charting platform here is we actually have an undo button as well here. So I've come in here, and probably one of the things you're going to notice immediately is I've come in here and I've labeled each one of these 3 o'clock a.m. candles here. So what we're looking for, oh yeah, actually somebody's just asking me what this trading strategy is. This is called the London Breakout Strategy. This is something that our analyst here, Joshua Martinez, created. Strategy. There we go. So what we're going to be looking for is the close of the 3 o'clock a.m. Eastern Time candle. So essentially you'll be starting this at 4 o'clock at the close of that candle. So what I've done is I come in here, we're going to be looking for the directional movement coming off of that candle. So this is on the pound New Zealand dollar going back 2 weeks. Last Monday, June 27th, 3 o'clock a.m. candle, directional movement coming down. Now to give you an idea of that type of directional movement that came off of that, there was about 271 pips of directional movement off of 3M, the close of 3M candle on June 27th. Now here is the one on June 28th, 3 o'clock a.m., the directional movement, 132 pips coming off of that candle. This is the one for June 29th, 115 pips. You're starting to get an idea of how this works here. The 3 o'clock candle on the 30th, the market came down 370 pips. And as you can see here, it keeps coming down just like that here. So what I'm going to do is I'm going to show you here on a different currency pair, pretty much on the pound New Zealand dollar. With the strategy I'm about to show you here, you would have won. Let me see here. You would have won 1, 2, 3, 4, 5, 6, 7, 8 out of 9 trades. This last one right here would have went against you. So out of this one right here, you would have been successful on, what I say, 8 out of 9 trades. Not too bad with the strategy I'm going to show you here. So let's go ahead and right now, once again, like I said, 200 plus pips, 100 pips. This one here is 300 pips. All we're doing is we're going after 50 pips. Let me go ahead. I'm actually going to show you this on a different currency pair. That was on the pound US dollar. Yeah, out of the last, yeah, so you're typing in wow here. Yeah, on the pound New Zealand dollar here, the pound New Zealand dollar, you would have won 8 out of your last 9 trades here. On the pound Swiss franc, this one right here, you would have won every single trade in the last 2 weeks. You would have won 9 out of 9 trades doing exactly what I just showed you right here. But I'm going to show you here on the pound Australian dollar here. This is a good example here to show you how this works. So once again, looking for that directional movement. In fact, going even back to the week before, here's June 24th, a 3 a.m. candle. Coming off of the close of that 3 a.m. candle, 207 pips right there. And here is the June 27th candle, 3 a.m., 246 pips. June 28th, the 3 a.m. candle, it went up about 103 pips here. So just kind of give you an idea of how that works. We're actually going to start here. There's a reason I'm starting here on the 29th. I'm going to show you how this works both going up and going down. So here is the 3 a.m. candle on June 29th. This is what? This was last Wednesday right here. I'll start right here and I'll bring this to the live market. Let's move this down. And here's what we're going to do. At the close of that 3 a.m. candle, what we're going to do, and there's a couple different ways of doing this here. We'll teach you there's a couple different strategies of doing this here. I'm going to show you kind of the old school way of doing this here. What we're going to do is at the close of that candle, we're going to place 2 different trades here. We're going to come in here. We're going to place an entry buy 10 pips above the high of this 3 a.m. candle. So we come in here 10 pips above, oops. In fact, let me zoom in here. I'm going to zoom in here just a little bit more so to make this a little bit easier to see. There we go here. So I'm going to come in here 10 pips above the high. Oops. Let's see. We're at 80.85. So we're going to set this at 80.95 right there. So entry buy. Oops. Entry buy is going to equal plus 10 pips above the high. And the high, yeah, somebody's just asking, is the high the candlestick wick? Yeah, the candlestick wick there, that's the high point right there, 10 pips above the high. Yeah, if I'm going a little bit too fast, we have plenty of time here today. Just tell me to slow down. I want to make sure that everybody gets this. I have, fortunately, the luxury here today. I normally don't have the luxury of giving this enough time, but we actually have enough time to actually go through this here. I'll actually show you several examples of this being done. So the entry buy is 10 pips above the high, and we're also, oops, we're also going to come in here, we're going to set an entry sell. Entry sell 5 pips below the low. So it's 80.09. So we'll set this at 80.05. 0.04. Now I'll type that out for everybody. Entry sell is going to equal minus 5 pips below the low. Just like that here. So once again, it's very simple what I'm showing you here. I'm showing you just the basics of this. I'll try to come back in here and show you some more ways of fine-tuning this. There's other ways of determining direction that maybe you'd only place one of these trades just like this here. But basically what we've done here is to close that 3 a.m. candle, our entry buy, entry sell, these are two pending positions. We're not in this market until the market actually triggers one of them here. So this is going to help us. And this is one of the things I want to point out before. What we're looking for in this market here, there's 3 questions we need to answer. And this is one way of answering them very quickly. Number 1, where is the market going? And this is basically going to help us determine which way we believe the market's going to be going, that directional movement. Number 2, where and why to get in. And this is going to help us answer those depending on which direction the market's going. And I'm also going to show you here number 3, once we are triggered in this position here, where and why to get out. So we're going to make this very simple here. This is going to answer these 3 questions right now. Where's the market going? Depending on which direction gets triggered here, either our entry buy or entry sell, that's going to help us to predict which direction we believe the market's going to be going. Where and why to get in? When we get triggered, our entry sell or entry buy, we're going to be turned into an actual market buy or market sell. And I'm going to show you here where we're going to be setting our limit on where to get out of this trades here. So let's go ahead and let's see what happens here. And 1 hour later, bam, right here, that entry buy position, it gets triggered. That is now an a market buy, meaning that we are now in the market and we're now buying the market because we're now looking for that directional movement. At this point, we believe that the market's going to be going up, so we're buying into the market based on this simple trading strategy. Once one of these positions gets triggered, we're going to cancel the opposite order because we're not looking to sell the market, we're looking to buy the market. So we're in this position, we have our market buy. Now what we need to do is we need to set a floor here because we don't want to risk too much on this trade. So what we're going to do here is that when this gets triggered, we're going to set a stop loss. Now our stop loss is going to be a little bit different buying the market versus selling the market here. Our stop loss when selling the market, when buying the market is going to be at the low of that 3 a.m. candle. Once again, that wick is the low, and that is going to be our stop loss. I'll type this out once again for everybody. Stop loss when buying is going to equal at the low. So at the low right there. Let me move this over here so everybody can see that here. It's a little bit different when selling the market, but when buying, we're set our stop loss at the low. We're in the market, we're buying the market. Now, we're now going to be trying to determine question number 3. Where and why are we going to get out of this trade? If you remember, we're going to be looking to go after first base. First base in this case here is 50 pips. So we're going to come in here. Let's measure out 50 pips from where we're entering into this here. That's going to be at 1.8147. So 1.8147 right there. That is going to be our target. Oops, let me move this down here. And our target is right there, 50 pips equals, and we refer to this as first base. Because there's other ways to capture more pips off of this. I'm just simply show you here, and that's going to equal plus 50 pips. Now, as you remember, the average daily trading range could be over 200. Let's just get on first base and capture 50 pips here, and we can go from there. So let's see what happens here. We're in this market. We're buying the market. Stop loss is set at the low of that candle. First base, our target is 50 pips. So 1, 2, 3, 4, 5 hours later, the market comes up, triggers our target. We're now out of that trade. We just captured 50 pips on that trade. Very simple trading strategy here to help predict where we believe the market's going here. Now, for those of you wondering what those 50 pips would be worth, if you were trading a mini lot account, you have just captured, or you have just generated $50 in profit. With a standard lot, you have generated $500 in profit off of that trade right there. So once again, this is just a very simplified version of how this works. To fine-tune this a little bit here, for those of you that want to go through our live Forex mentorship program, one of the things you might notice here, does everybody see what's happening here with the market here, was making higher highs and higher lows. In fact, let me type this out for everybody here. So you can see here, the market comes up, comes down, comes up, comes down, so we're making higher highs and higher lows. So this would kind of give us a little bit more confirmation that we believe the market's going to be going up just like that here. But let's go ahead and let's delete all this here. I don't want to distract you, but I just want to kind of give you guys an idea of how we can help fine-tune this a little bit better. If we want to give a little bit more accuracy, a little bit of corroboration as to which way we believe the market's going here. So let's go ahead and let's delete all this, and let's move over now to the next 3 a.m. candle here. And I'll actually bring this to live market and show you all these different trades of what they've done here. So let's move this up here right there. Okay, so this is on June 30th. I believe this is last Thursday, June 30th, the close of the 3 a.m. candle. Now, at the close of that candle, very simple trading strategy here. We're going to come in, do the exact same thing as what we did on that previous one. We're going to come in, we're going to set an entry buy 10 pips above this high. So 81.81, so we'll set that at 81.91. And we're set an entry sell position 5 pips below the low. So 80.70, 86, oops, yeah, 80.65 right there. And I'll type this out. I'll type it out one more time for everybody here. Our entry buy is going to equal, entry buy is plus 10 pips above the high of the close of that 3 a.m. candle. And then we have our entry sell. It's going to equal minus 5 pips below the low. So there's our entry buy, entry sell. Both are pending positions. We're not in the market until one of these actually gets triggered here. Now, some of you, I got a couple of you asking why the discrepancy here. Just what we had determined here. We just determined that 10 pips above, 5 pips below. And I'm also going to show you here how it's a little bit different here in selling the market with your stop loss as well. That's something if you're in our live market Forex mentorship program, we can go into a little more detail and explain how that works. So let's go ahead and let's see what happens here. Oops. So there's our 3 a.m. candle. 2 hours later, the market pulls back, triggers our entry sell. So at that point, our entry sell now becomes a market sell position, meaning that we are now in the market, we're now shorting the market. We now have a more of an educated opinion that we believe that that directional movement coming off that 3 a.m. candle is going to be going down, just like that here. Yeah, a couple of you are typing in, well, yeah, this is a very simplified version of it, just like this here. It's been worked very well the last 2 weeks, and we can fine tune this a little bit here, but we now have our entry. We now believe the market's going down. First step is we come in here, we cancel the opposite order. We're going to come in here, we're going to cancel that market buy because we believe the market's going down. And here's a little bit different here. We're going to set our stop loss. In this case here, when we're selling the market, our stop loss is going to go 5 pips above the high. So 81.81, so we'll set this at 81.86. And I'll type that out so everybody can see that. Stop loss, that's when selling the market, is going to equal plus 5 pips above the high. So once again, our entry, we're selling the market. Our stop loss, our risk is right there, 5 pips above the high. Now, our target, once again, first base is going to be 50 pips here. So we come in here, oops. So 50 pips is right about, so 8015. There we go. So, and once again, let's set this, there's our market sell, and target equals a minimum of plus 50 pips. Or we also refer to that as first base. Now, the reason I refer to this as first base is that once we hit that, we can always move our stop loss up, lock in some of that profit as the market is moving in our favor here. So let's see how this trade works out. I can kind of give you an idea of how that works as well here. So our market sell is in, our stop loss is set, our target is set. Let's see what happens here. So 1, 2, 3, 4 hours later, market does in fact trigger that target right here, our limit, and we just captured another 50 pips here. So not too bad. Once again, with a mini lot, that would have equaled $50 at $1 per pip. In a standard lot, that would have equaled another $500 just like that here. So I think everybody's kind of getting an idea of how this works. Let me delete some of this here. In fact, actually, let's see where this went. Let's see how many more pips. Okay, for instance, there, look at this, my friends. There was our 50 pip limit here. Look how much further the market came down. It came down another 258 pips. So the neat thing about this is that when we would have triggered that 50 pip limit, here's what you can do. You can come in here and you can bring your stop loss up to break even, or maybe even bring it to maybe just a couple pips, maybe 5, 10 pips above that right there, and then you can simply trail this as it's going down here. Look at that, it keeps going down and down, and depending on where you set your stop loss off, maybe you bring it down there, you would capture some additional pips as it's going down here. But once again, I'm just simply showing you here how to get 50 pips off of this trading strategy, first base, just like that. So not too bad. Now let's go ahead, let's bring this to the live market. Can I give you an idea and show you how this actually worked moving forward? Here was the 3 o'clock a.m. on July 1st. Look what happens here. Directional movement coming down. It peaked at 145 pips right there. So you definitely would have gotten your 50 pips on that one. Here's the next one right there, the next 3 a.m. candle. 3 a.m. on the 4th, this Monday here, the directional movement. Let's see here. How far did that come down? That came down 73 pips. Let's see, did it go down any further than that? Nah, so you probably have gotten, you got your 50 pips off of that one. Let's see here. We got, this was on Tuesday morning, 3 o'clock a.m., 3 a.m. candle, directional movement coming down off of that. In fact, this one, 224 pips. 3 a.m. candle, directional movement coming down here. Let's see here. We got, I think this is Wednesday right here. Wednesday, 3 o'clock a.m. The directional movement coming down is that. 173 pips. And then the last one right here, we almost had perfect up until this last trade. See what happened here. Here's our 3 a.m. candle. Got a little bit of directional movement. I think we only got maybe, what, about 20, 30 pips off of that? Yeah, about 20 pips of directional movement. They don't always go in your favor, my friend. So, you would have probably lost this one. But look at this. Just a simple trading strategy I showed you here in the last 2 weeks. You would have won 1, 2, 3, 4, 5, 6, 7, 8 out of 9 trades. At the minimum of 50 pips per trade, you would have, what, that would be 400. Let's say you lost 50 on this one, so you would have been up 350 pips on the pound Australian dollar. I just showed you here on the pound New Zealand dollar. You would have won 1, 2, 3, 4, 5, 6, 7, 8. And this one, same thing happened. A little bit of directional movement, it U-turned. So you would have captured 350 pips off of that one if you took every single trade here. Let me show you another one here, the pound Swiss franc. This is another one. It's won every single trade in the last 2 weeks here. 1, 2, 3, 4, 5, 6, 7, 8. And then this one right here, see what happened? There was our 3 o'clock a.m. candle. It went the other way, and I think we got 50 pips off of that one as well. So not too bad here. In fact, the other ones here on the pound Canadian dollar, the pound Canadian dollar, you would have won, what, about 7 out of 9. The pound US dollar, you would have won, let's see, 1, 2, 3, 4, 5 out of 9. So pretty much, like I said, you average about 177 pips per day on average, utilizing the same trading strategy I showed you. You would have won 80%, up about 1,600 pips, 43 out of 54 trades utilizing this trading strategy here. So the only one thing I want to point out here is, like I said, let me see here. Let me find, which one had a winning trade here this morning? The pound Swiss franc here. So for those of you wondering here, a couple more neat features about the charting platform. Let's just say that right here was our entry right there. There was our entry. Let's say we actually use our charting software here. Let's say at 3 o'clock or 4 o'clock or whatever it was, we placed our trade and we got into that trade. Now, some of you might be saying, well, do I have to stay up until all night to see how these trades pan out? Here's what you can actually do. Let's just say that you set your 50 pips. There's your 50 pip limit right there. Here's another neat thing about our charting platform. You can set up an alert that when the market triggers that alert, it can send you a text message or an email. So if you want to come in here, tell it here, hey, I want to receive maybe an email alert. You can come in here and let's see if it's going to let me do this here. Oh, here we go, send email. Hold on a second. There we go. Oh, so we can add an email account if we want to, or we can add our phone. It can send us a text letting us know when that gets triggered here. So for those of you, if you don't want to stay up, you can simply go here. Now this is very useful here. This is very useful because Memorial Day. On Memorial Day morning, I got up, found pretty much the perfect trade. Everything lined up, so I went ahead and placed that trade. Now obviously on Memorial Day, I was out boating, I was out at the pool, that sort of thing. So what I did was I set up an alert to alert me when it hit a level of resistance, to come in and take a look at that trade. So on Memorial Day, while I was out boating, enjoying life, that sort of thing, I set up alerts, received a text message letting me know that my trade had hit that level of resistance. I then went back and decided to go out and close that trade. I think I captured about 120 pips while I was out enjoying that day. I placed the trade in the morning, came back later on in the day, the alert let me know I got out of the trade just like that. And the other neat thing about this here, so you can do the workspaces here, you have these alerts. Let's see if there's anything else. Oh yeah, for those of you, you may have seen in some of our other webinars, we have our market scanner. It's built into our charting platform. You won't get that as part of the free trial here today, but if you choose to become a student, you get the market scanner. You can actually access the market scanner right from the charts here as well here. So let me see if there's anything else here. Yeah, you have the ability to trade from the charts, those auto Fibonacci's, these auto tools. Oh, another neat thing about this. Another neat thing about this is that you have the ability, these workspaces, they can be saved. You can save them either to your computer or to the cloud. Now the neat thing about that is that, for instance, if you're working on multiple computers, you can set your workspace to the cloud, and you can access all these different workspaces right from the internet, right from your cloud, just like that here. And another neat thing about this, we have our experts here, our expert traders here. Ted Devan's one of our experts, Gary Fickhart. Let me show you some of these other ones here. Even Josh. In fact, I think as part of this here, I think you will get access to Josh's his charts right here. In fact, let's go ahead. Let's open that up, and I can show you here. Kind of give you an idea. You'll actually get. I think you get access to this as part of this special here. You'll actually get in the videos that we'll send you here. They'll show you how you can actually get access. So you'll actually have a live professional trader sharing their charts with you. You'll get access to that. Showing you what's going on in the market just like that here. So let me see if I think I covered everything here. You have the ability to trade right from the charts. You have those auto tools. But what we're going to do here today, I showed you here that London breakout trading strategy. The question you have to ask yourself is, 5 times a week, you have different opportunities to take advantage of these 6 currency pairs. So essentially, with that London breakout trading strategy, that's going to give you 30 opportunities each week just to capture a couple of those pips. Like I said, if you took every single one of these trades over the last 2 weeks, you would have been up with, over the last 9 trades over the last 2 weeks, you would have won 43 out of 54 trades. You would have captured 1,600 pips. So just think about maybe you just captured 1 or 2 of those, maybe 1 a day or something like that. Imagine the opportunities you would have gotten off of here. So what we're going to do as part of this investor inspiration here today to help kick this off here, we're actually going to put the ultimate charting software in your hands here today. We're going to give you 14 days to take this for a test drive absolutely for free. So as part of the charting platform I'm about to give you right now, you're going to get the exclusive auto Fibonacci tool, that auto trendline tool, the King's Crown tool, the head and shoulders tool. You'll be able to set those email and text alerts, trade directly from the charts. Once again, you have those cloud-based workspaces. You have the ability to set up a demo trading account right from your charts, and we also have the auto trading capability right from the charts as well here. Now, as I mentioned before, this charting platform I just showed you, normally we don't do this. This is actually my first time actually being able to offer this to non-MTI students. Normally, you'd have to be a student of Market Traders Institute to get this, and it would cost you $249 a month to get access to these charts on a month-to-month basis here. But here's what we're going to do for investor inspiration here today. Because you just stuck with me here for, I guess we've been here, about 45 minutes or so? I guess it didn't take too long, not too bad here. So I have a little bit of time to go over all this here. For the investor inspiration special here, I'm actually going to give you 14 days, 2 weeks, to take this charting platform for a test drive absolutely for free here. Now, if you choose to go beyond that 14-day trial, we're going to get you locked in as far as investment inspiration here today. If you like the charts, you want to use the charts, well, we're going to get you locked in. It's only going to cost you $59 a month on a month-to-month subscription after the 14 days. Now, the first 14 days, absolutely free. You can take them for a 2-month test drive, take it for the test drive, decide whether this is for you or not. What we've found is we found great success with this here. Say a lot of our students, they love the charting platform. So what I'm going to do is I'm going to go ahead and I'm going to send that link out. Let me send the link out to everybody here in the room, and I'm going to walk you through and show you how you can actually get your test drive on this. So I just went ahead and sent that link out to everybody here in the room. You click on the link, you can register for 2 free weeks absolutely for free as part of our charting platform here. So here's what we're going to do. When you click on that link, oops, hold on a second here, let me pull this up. It's going to take you to this page right here. All you do is you click on activate your 14-day free trial, enter in your billing information. This is only for extending it past the 2 weeks. As long as you cancel within those first 2 weeks, you won't be billed anything. And I'll explain to you here how easy it is if you decide you don't want this here, but you enter all your information, and you'll get access to that charting platform. You'll be able to download activate your software trial just like this here. Once again, normally you have to be a student. We normally don't offer this as a free trial. If you want to take those charts for a full 2-week test drive, you can actually do that here. Now, when you actually register for the 14-day trial, you'll get access to this back-end portal here. We actually have videos here showing you, actually Josh Martinez here, showing you how to actually set up your charts, how to use them here. You can go through here how to set up a demo account, how to enter, get out of the market here, access those workspace templates, show you how to do the Fibonacci's. That's just on those first couple lessons. Let me see here, lessons 6 through 10. Oh, okay, I got logged out of that here. But yeah, there's other lessons just like that here. In fact, to show you how easy it is to cancel your subscription within those 14 days, you simply click on this link here, or I'll pull up a page here showing you, there's a phone number if you would prefer to call in to cancel those out as well. In fact, what I'm going to do here is let me quickly walk you through this here once again. This is for the investor inspiration here, that 2-week trial. What I'm going to do is let me explain to you everything that goes along with this here. You can take this for a 2-week test drive, absolutely risk-free. Within those 14 days, if you decide that this isn't for you, you can simply cancel that trial subscription. You call this 800 number. I'll pull it up here in just a second, or you can email us at cancels@markettraders, or you can go into that back-end portal and cancel it just right there. Now, all the full details of this 14-day trial, they are on the website, and you can get access to that as well. So the steps to getting this here, you click on that link. In fact, a couple of you, let me send out that link one more time to everybody here in the room. There we go. So everybody should have that link. If for some reason you can't click on the link, copy and paste it into your web browser. You'll be able to access that here. So the first step is to click on to get that 14-day trial. You click on the link. Then the next 2 weeks, take it for a test drive. Go through those lessons, take it for a test drive, see if this is for you. Within those 14 days, cancel it. You owe nothing. If you choose to go beyond the 14-day trial, you'll be locked in. $59 a month. It's on a month-to-month basis subscription here. Once again, you would normally have to be a student of Market Traders Institute to get this. So all you're really looking at right now is just taking for the 14-day test drive, see if this is for you, and then go. If you choose to go beyond that, you'll get that here. So what I'm going to do is I'm going to leave this up here for just a second. If you need access to MTI customer support, there is the 800 number. It's 1-800-866-7434. And once again, cancels at markettraders.com. You can cancel this within those 14 days just like that here. So I'm about to wrap this up. I think I've just about covered everything here today. I kind of gave you an idea of how the Forex market works. I taught you a basic trading strategy here. For those of you wondering about that London breakout trading strategy, we do have other basic education programs. We have our live Forex mentorship program. If you like the charting software, you might want to take that for a test drive. We have other programs as well that you can actually get involved with this as well. So what I'm going to do is I'm going to go ahead. I'm going to send that link out one more time. Is anybody having trouble accessing the link? I'm sending out one more time. I can send it to you privately here. Once again, a free opportunity here to be able to go ahead and take advantage of this right now. So if there's any questions or anything, if not, I'm going to go ahead and wrap this up. Once again, normally you'd have to be a student of Market Traders Institute to get this charting platform. So this is only for investor inspiration. You get a free 14-day trial of that charting software. So if you want to go ahead, just like I just showed you here with that London breakout trading strategy here, you can use our charts just like I showed you here. Very simple and very easy to use. If you choose to go beyond that 14 days, $59 a month, just like that here. So yeah, great. So yeah, a lot of you asking some good questions here. Yeah, a lot of you asking, is there other programs? Yeah, we do, as part of Market Traders Institute. I just showed you like the very basics here. You may have caught my colleague earlier here, Joseph Cavallaro. We do have a much more advanced training program. If you have more intense, very more in-depth Forex training program. If you're interested in that, you can give us a phone call. We can give you information if you'd like to become a full-fledged student. The other neat thing about this charting platform is normally when you're a student, we also offer the ability to get lifetime of this charting. We're about to end that right now. So here's a perfect opportunity to not only take this for a 14-day test drive. If you choose to become a student, we can show you how you can get these charts for life. You make a one-time payment, and you want to make any payments as you're going along, just like that here. So if there's any other questions here, I'll stick around here for about another 30 seconds to answer any questions we might have about this here, whether it's about the MTI, whether it's about the Forex, whether it's about this charting platform, or that London breakout trading strategy here as well here. Yeah, so actually, somebody just asked, thank you for that. James just asked about the European session. Yeah, the reason we're looking at those breakouts during that London session, the reason for that is because it's been said that during that European session, they're processing the largest bulk of the Forex transactions here. So the reason I showed you that London breakout trading strategy, why it works so well, is it's going to allow us to take advantage of those directional movements in the market here. I apologize if I didn't say that here as well. Let's see here. Yeah, Bright, are you a student of Market Traders Institute right now? I see what your question is right there. That'll help me answer your question here. Yeah, normally if you're a student, yeah, it would cost you the $249 a month. Yeah, so yeah, normally if you're a student, it would cost you $249 a month. So Bright, here's the opportunity. If you're interested, just starting out at the very basics here, you'd be able to take this for a 14-day test drive, see if this works for you. If you choose to go beyond those 14 days, you won't be paying the $249 a month. You'll be paying the $49 a month for that month-to-month subscription as part of Investor Inspiration here. So yeah, normally as a student, unless you do the one-time payment for lifetime of charts, which we're about to cancel that. So just want to explain that to everybody here, how that kind of works here. So I'm going to go ahead and wrap this up. I want to thank everybody here for joining us here. Hopefully I was able to take enough time. I guess it went a little bit quicker than I thought it would. But hopefully I gave you kind of an explanation how the Forex market works, this trading strategy, kind of show you how this charting platform works, how it's very easy to use these charts, to be able to trade right from them, and to use these trading strategies here. So on that note, my friends, if there's no other questions, I want to thank you for joining us here today. On that note, William Gallagher from Market Traders Institute, thank you all for joining us here today.